Hey, in this video, I'm going to talk about how to file federal income tax for your rental property. So basically, I'm going to show you some tax forms that you can use for filing the tax. And I want to explain when you have a rental income, so how those income be taxed. If there's rental losses, so how those loss being handled, right? Okay, let's start with the Schedule E. So your rental income is reported on the Schedule E Form 1040. So you can see here what's your rent received, then what's your expense. You can see rent income, deduct all the expense, then you have a net rent income, right? Net rent income, you're gonna copy this amount to Schedule 1 Form 1040-95. So that's when you have a net income from Schedule E Form 1040. Then you go to Schedule 1 Form 1040. Then ultimately you have this income on your Form 1040. So Form 1040, is the individual income tax, right? So basically, your rental income is passed through to you to tax at your ordinary income tax at your personal tax rate. So that's ultimately all those income gonna go through to your tax return Form 1040, right? So this is when you have a net rent income. When you have a net rent loss, so it's a little complicated. You would think if you can deduct net rent loss to from your personal salaries tax, right? So it's a little complicated. First is you have to understand the rental income most of the time is considered passive income. So when it's a passive income, right? It's a passive income. They have this rule called at risk rule and the passive activity loss rule. What they're saying is say when you have a passive loss, you only can deduct those loss from your passive income. So if you don't have passive income, so you cannot deduct this loss. You have to carry those loss forward to next year, the year after, then to offset your any passive income. So wages, salary, they are not passive income. The income from your investment, like stock, mutual funds, bonds, interest, then all those income are portfolio incomes. They are not passive income, so you cannot offset those income either. So that's the passive activity rule. However, there's a little exemption. Say, well, if you if you own a rental property and yourself is managing it, you are not hiring some like a manager company, to manage it. You yourself is managing it. You actively participate, get attendance, then, do all the managing rental property activities. So in that situation, if you incur a loss, so all your rental income couldn't cover your expense, basically you incur a net loss. In this situation, you are allowed $25,000 net loss to deduct from your other income. Let's say your other income is your salaries or wages or your all your investment incomes. So you can deduct from other income to reduce your taxable income of other income, right? So that's it. Basically, so this one you have to you own the property and you actively participate in managing it. In this situation, you allow up to $25,000. However, this $25,000 have a little income phase out range. Say if you allow deduct the entire $25,000 if your AGI is less than $100,000. If your AGI is more than $150,000, so you cannot deduct any of these losses. Okay. So basically, that's said. Then, if you have any loss allowed, you can do go on Schedule 1, then ultimately reduce your other income on the 1040. So that's how that works. So I want to mention that when you do rental property, 1 or 2 unit to rent it, right? So you do you saw that on the Schedule E, you have expense, you have a depreciation. You can do depreciation expense, right? That just is your advantage. For the residential rental property depreciation, you can depreciate is 27.5 years. It's a straight line depreciation. So that's how you calculate how much you can depreciate each year. Then the depreciation recapture if selling the rental property at a gain. So you do rental right now. So later, if you want to sell your rental property, if you sell at a gain, so you have to know you have to recapture those depreciation. You didn't depreciate those years, which will increase your capital gain. Then you probably have to pay higher taxes on those capital gains. Then another thing you should know, as if you just your job just manage a couple of rental property, then get income in this situation. If you don't have any other business, all this rental is you do not pay self-employment tax on it, which is the Social Security and Medicare tax. So because rental property basically is a passive income, so that's something you should know.